Yeah, hi guys, welcome. So today I thought of presenting a talk related to data center basically. So it's a theme which is already ongoing. Some things we have discussed last year also, but maybe I delved deeper a little bit now on some of the stocks. And I find an opportunity where I think some consolidation is happening and it might take some time before it can fly, but looks like a good opportunity in the longer run. And I will start sharing. Let me know once the screen is visible. The stock is Blackbox. How many of you have read about it or heard about it? Company Blackbox.
Oh, I have read about
Blackbox
it.
Avaya Global, right?
Yeah, yeah, it's Avaya Global, basically.
Okay, Blackbox
So
is a US-based company. Avaya Global was India-based. They recently took over Blackbox. They changed the name to Blackbox. I mean, I
yeah, yeah,
briefly read about that, if that's the company. Okay.
yeah. So I will share a little bit deeper thesis into why it could be a good opportunity, although the stock might have run in the last 1 or 2 years, but I still feel it's a good opportunity in the longer run. So I hope screen is visible for Blackbox.
It is correct. Yeah.
Yeah, yeah. Okay. So Blackbox is a global ICT solution provider. ICT means here information and communication technology provider specifically. What it does, it designs, deploy, and manage. It does end-to-end kind of services there. And for whom it is doing that? For whole global enterprise clientele, including Fortune 500 companies. And it is also targeting cloud providers at this point of time. How it does it? It is trying to go into AI powered analytics and IoT enabled devices. So this is something which is trying to give an end-to-end solution with a comprehensive solutions in different domains. And wherever it tries to do with the clientele, what it tries to do in the simpler terms, it is trying to enhance the network reliability. It is trying to support the scalability of the clouds, integrate the latest technologies like 5G or AI or IoT, and then implement them with the cyber security solutions. So this is in a very simple terms what it is trying to do. Number of employees 4,000, which is good. Number of countries served 35 plus. That is also huge. So that means it is a global presence definitely in a big number. Regions served are across the world like North America, Latin, Europe, Middle East, Africa, India, Asia Pacific. Everywhere it is trying to do something. Now, as you know, right, in the history, Aware Global was founded by Tata Telecom, and Tata Telecom does a joint venture with AT&T. Later on, AT&T exits, and this Aware Global Connect is formed with when Tata also exits later, 8 years later. Then SR entered, and then it expands into the North America and Middle East Asia, and then forms different alliances, done some acquisitions, and latest it completes the acquisition of Blackbox. And now the company Aware Global is renamed as Blackbox Corporation. So this is the little bit of history. Now what it is trying to do, it is trying to give the solutions in five different fields, five or six different fields. First of them is connectivity solutions. That is providing the high speed, secure, and scalable. So as data centers are expanding, right, this connectivity is very, very important, and it is trying to go through all the possible solutions like fiber, IoT, or doing the LAN WAN kind of a thing, which also comes in another domains like enterprise networking. So here they are also trying to provide the physical infrastructure that other companies are also doing in data center. But when it is doing that connectivity, it is also trying to have the surveillance of physical infrastructure, and wherever they can improvise, they are also trying to do that. And then structured cabling. So it is kind of an end to end. So they are last mile connectivity also they are doing to data centers for this high speed and scalable one. Then for the data center, the next field, they are trying to do the modernization services. So some of the data centers might exist, but they would not have the highest speeds. They would be using the old CPUs, GPUs, they might be using the services of the cloud, but that is not up to the mark, or their space would be less. So they're trying to give the clientele the better solutions out of it. And even the disaster recovery is possible with their solutions. So this is one integral part of data center where you need to recover the data. Then come the enterprise networking, where they are providing the solutions with AI and 5G, and they're trying to go deep into this. At the same time, they are trying to do network design also. So when you do the networking, sometimes the network design and deployment is outsourced, and you later on manage it with a different company. But in this case, they start from the first step of doing the network designing and deployment also, and then manage it. Here they are using everything LAN, WAN, cloud, 5G, everything basically here. So they see the optimum potential of which technology they can leverage for this specific clientele, and then they go deep into it to design. Modern workplace, basically, they are trying to build the solutions where they can empower the employees to work seamlessly from anywhere. It's kind of more providing the remote solutions, basically. So since most of the companies are working in hybrid mode after COVID, last 4 5 years, so the need has come to deploy the right solutions where it can be effectively managed, and it should not impact the companies whether the employee is working from office or home. So they are building the remote solutions for this. Cyber security, yeah, they are trying to form the solutions where feed threat detection and response, identification, and access management. So here they are working deeply. Cyber security is still a very small business for them, but they really expect it to grow faster in the coming years. So they have just started in cyber security at this point of time. So last one is technology products, where they are this KVM, IoT solutions empower the users to control the connections. So once you have deployed the network, or you have put all the solutions into the systems like AI or 5G or LAN or WAN, or you have put a possible mechanism to detect the threats, but supposedly threat happens, then what is the control over the users basically? So they have the different kind of solutions which they're called as technology product solutions. So it's a kind of a control room technology where the security guards or the people who are managing that center basically have that control access. They can switch off certain network parts, they can switch on, they can monitor what is happening. So those kind of solutions are available basically. So it starts from the server room, operating console, and video wall management, where things are practically visible and they can change it from a central area. So this kind of solutions are available, and this technology product solution is not a need of data center, it's a need for every organization basically. So technology products they are trying to do, or so this field technology products possibly would be growing only at 3 4 5%, but it is consistent across the different organizations. It's not specific to data centers. So the number could be small in CAGR, but the need is very high. Basically, it's a necessity. The some of the other parts, some of the organizations might feel okay, they want to opt for it or not, and some organizations do opt for it, some do not. But the last one is a need basically. So that's where technology product is important. It is compounding. Now, revenue wise, out of these segments and regions, North America has the highest revenue, and followed by Asia Pacific, including India. Now, the where I got or I get into this black box is the kind of customers they are serving, like Meta, Amazon, Microsoft, Intel. So these are the major big customers of world which they are serving. And this is where I get interested. If some big organizations like Meta, Amazon, and Microsoft are trusting Blackbox, why couldn't small organizations can also do? And when I went deeper, I see they have 2,000 plus clients basically. And why I am interested more, I will share further. As we see, the clients are 2,000 plus. Top 200 clients are giving them almost 84% of revenue. And out of that, 120 clients are in Fortune 500 companies. So this is very important, because the top 500 companies, out of which you are getting almost 20-30% of revenue for your domain, that means really the big guys are trusting you with the work. And as we see, they have a huge dependency on North America. And one last year or possibly 1.5 years. Because of this soft landing versus hard landing debate, some of the contracts have not flown very easily. And that's where the stock or the company is undergoing consolidation at this point of time, where they are just able to survive with the flat run rate. But the moment this rate cut starts happening, company expects, okay, some things will start flowing back faster to them. And that's where the opportunity will start maybe 1 or 2 quarters away. Revenue by industry, again, they are serving a lot of industries like financial services, technology, healthcare, business services. So a lot of services, even manufacturing, that requires everything. Client concentration, top 200 is giving 84% of revenue. And if you see the client-wise contracts, we have 2,000 clients, but 1,500 clients are only giving up to 5 crore. This is what they want to change. And this is my key thesis here. Key thesis here is they want to remove this 1,500. They want to focus on the top 200, 500 clients only. They see that once the meta comes into the picture and only giving 1,500 crores, by putting some effort, that can easily go to 100 crores. While at the bottom of the pyramid, they have to chase 20 clients to get those 50 or 100 crores. Instead of chasing 20 clients, they want to chase only one client now. So they are possibly increasing the dependency on the big players and want to optimize the workforce towards giving the best solutions to them. So this is the point which caught my eye, that they want to do it. And another factor that will come into picture with this model is the smaller the client, the difficult is to get the revenue impact by increasing the contract price. With the bigger set of people, of course, there would be squeezing of the contracts, but at the same time, when you want to increase it by certain paisa, certain pounds, certain dollars, they will not crib about $1 or $2 there, here and there, basically. So suddenly the small increase in the contract price will land more in the bottom line there with the top clients. And this is what they're trying to do. They're trying to do the margin expansion of their product profile, and they want to hit 10% from 6%, 5% in the past years. If I see whether they have done it, so past few quarters have been clearly showing, despite the decrease in the revenue, they are able to up their EBITDA and OPM margins. So basically, whatever they are talking, they are trying to implement. And because of two things, they are trying to remove this lower end of clients, plus at the same time, a reduction of the revenue from North America because of the soft landing versus hard landing debate. Last few quarters, you can see the stagnation of revenues or maybe a little bit down of revenues. And that will correct with the time. So that's where the opportunity is. Once the revenue is back and margin is expanded, the bottom line can go much faster. Okay, so that is one of the key theses I was interested in. Now, has the company done well over the years? As we can see the awards, we will not go into each of the awards, but the point here is they are consistently getting recognized in different forums, basically. That is important, and in the different fields in which they are interested. So that is where I see, okay, they are recognized well across the domains. Okay. Uh, uh, yeah. So now coming to the fundamental ratios. So one point is a typo on the debt to equity part, which I have written, but other things like ROCE and ROE, so they are 30% plus. That is where I'm interested in. So consistent ROCE and ROE more than 30%. On top of that, free cash flow is good. There is a small pledging percentage, which is less than 10%, but that's okay for me. That's a small, very minor red flag. Debt to equity is high, 1.48, that they are trying to reduce already. And if we go in the past, we can see that in the last 6 years, what they have done. Sales wise, they have grown 9x in 6 years. Profit wise, they are growing by 10x. And this is where you can see the operating profit margins. So last few years, 5%, 4%, and they're come up to 7%, and they are on target to reach 10% there. So even if the revenues are almost stagnant in 2023 and 2024 financial years, you can see the impact on the bottom line there. The profit has grown from 24 crores to 138 crores. So profit has grown 5 times despite sales have been stagnant. And if we go in the past, they have been consistently over the years, there is a good CAGR in the sales growth basically, right? So eventually the stagnation will go away and finally the company will go back in the few years on increasing the revenue. And at the same time, if they keep the OPM margins, that will keep on growing. Their uh, target for financial year 25 is to hit 200 CR at the bottom line, almost with a sales of 6,500 to 6,800 CR sales. So that means only sales is increasing by 5 to 10% maximum, while the bottom line will increase by 50%. That's what their target is. So that means they are really working hard to improve upon the contract price and everything and removing the low end of clientele. What are their strengths? Long-standing relationships, because if we see 2000 plus clients and working for so many years, that is definitely a strong point for them. Strong capabilities, otherwise big people wouldn't have emerged for them as a clients. Diversified geographical presence, so they are spread across. So only the North America which is impacting directly, but otherwise other revenue is consistent. Strong technical qualification and certifications, basically, so each of their technicians are getting the certificates done. Strong support to the customers, having number of delivery and support centers. In India itself, they have 14 in different cities. So that is really helping them out to spread the workforce and do the right work. Management team is experienced. Industries wise, so there are 6, 7 industries I have studied, and then we see that 6 out of 10 largest technology companies are dependent upon them. Healthcare, 8 out of Fortune 500 healthcare companies, 7 of the pharmaceuticals. Oil, gas, and utility, again, 6 companies from petroleum and 4 of the top 15 utility companies in US. Broadcasting, 2 of the top 5 broadcasters globally depend upon them. Retail in US, 7 of the top 30 retail setups dependent upon their Blackbox services. Banking, 6 of the Fortune 500 banks. So there are still more industries, but I've just tried to capture that. Yes, from each industry, top people are working with them. Now, strong collaboration with technology partners. So as you see, lot of the names where they are working together, it includes Genesis, Avaya, Soluna, Juniper, Nokia, Oracle, Zoom. So a lot of strong collaboration with these technology partners. And for the products also, they have good names associated there. So that means they have a well-known, recognized place in the industry. That is the key point here. Instead of going deeply into each what they're doing with each of the companies, they are well recognized and their collaboration is working. Any questions till this point? Then I will go to the triggers now. Basically, what are triggers in the coming time? Okay, so in the triggers, the macro picture first. Macro picture is global IT spend is increasing across the regions, and the projection is it is increasing by 8 to 9% over the next 4 5 years. It includes AI, machine learning, Internet of Things. If we go into one of these segments, possibly some of these segments will be growing by more than 11 12%. Capacity of data centers, that is definitely going to increase from current situation, and it will become double or triple in the coming year. That is the key from the first graph. And the second one is on the connected buildings, basically. So the whole building concept of getting connected, similar to what Genesis is also doing. So this segment is growing by more than 13 14%. And this will definitely have an impact on the company's growth. Another one is the cybersecurity market. We have discussed 2 3 years back also this segment will grow, and in between whenever the discussion comes up. But there are no real companies we have been able to identify till now specific to cybersecurity apart from cyber tech. But this segment is also expected to grow by 13-14%. So most of the time, most of the industries, if you go and study the charts, they will grow by like 6, 7, 8% CAGR for a few years. Now this company is into a segment where the segments can grow by 12, 13, 14%. So that means double the average industry rates, basically global rates. So that means the company is into the right segments if it can execute it well. So these three potential exhibits I've captured from different reports available. And then coming to the kind of work they're doing, for example, emerging technologies, which is metaverse. So this segment is expected to grow to $5 trillion, and it gives a significant growth opportunity in the digital workplace. So it involves AI and machine learning. And what Blackbox is telling us that they are capable of deploying such technologies, and they have done it. Second is on the IoT. Again, by 2025, certain number of IoT devices they are telling that will connect to the internet per minute. It's not per year, it's per minute, generating almost 8 to 10 trillion in economic value. So again, here they have a right or strategic partnership with the leading partners there, which can be leveraged to supply to their clientele. So this is two technologies which I also feel will grow really well in the coming 4 to 5 years, and Blackbox possibly is in the right place to leverage that. Next is the digital infrastructure and cloud computing. So this is already work in progress. It has been many companies have been adopting it, and Blackbox is comprehensively providing the services in this part. Digital transformation driver, where it is similar to kind of like modern workplace, which we have discussed on the remote working and enterprise networking with the LAN WAN kind of stuff. This is what companies into. Cyber security, yes. So companies focusing on the advanced cybersecurity part, and they are trying to get the right certifications, and they are trying to prevent the cyber threats with IoT. This is important here. So even one of the segments recently I come to know on the lift segment. So see, each apartment has a lift, and at times we have seen the lifts have been stopped for certain reason, right? Some fault happened in the lift and it gets stopped. We have to call the service engineer. Now there are IoT devices coming into the lifts. The moment lift gets stopped, a signal is generated at the service center itself. So even before you call, sometimes service engineer will be coming by default to your home and checking the lift. So I've seen this being getting deployed in Delhi, and I saw basically they demonstrated, okay, this IoT device, if lift gets stuck, how this gets signal is passed to the service center, and those people are able to reach within like 15 to 30 minutes, depending upon lift is not in a working condition, if it is open or it is closed. Let's say lift is closed and the person is stuck inside. It will also have some kind of a heat mapping or thermal detectors where it will kind of sense another signal and tell people at the service center, right? Okay, some people are also stuck there. So, uh, that creates an emergency response at the service center. If the lift is closed and the signal is rejected, if lift is open and then signal is detected, then possibly they have a different signal mechanism from IoT. So that is an IoT application, but here what they're trying to do is preventing those kind of cyber attacks using IoT. So it's a combination of the full services that will happen in the coming time. And then advanced analytics and data basically. So um, what they did in last year. So the company have been continuously working and getting the either the clients or expanding basically. So they are releasing new products like AlertWorks AW3000 wireless gateway, which is the IoT solution for infrastructure monitoring. So that will work with the long range wireless communication. So that is called as LoRa WAN basically, and short range through Bluetooth. They are expanding into India's data center market now. as we see, their major contribution is coming for North America. But here, now they see India's data center market is developing and growing. And they see next 3 4 years they will be able to get the good revenue out of it. So they are expanding into this market, and then they have created this hyperscale data center of excellence in Minnesota, and the similar thing is being developed in Bangalore also now. So this data center of excellence basically with the hyperscale thing is they are trying to optimize the solutions with the similar data center, in the same data center. And then in the cyber security, I would request people to go on mute. Okay. So on the cyber security, very small business at this point of time, but they're getting the prominent clients getting onboarded in the last year. 17 clients they have been telling, and one of them is Intel. So then acquisition of cloud company in Australia, and then award winnings or partnership with other people. That's what they're trying to do, and they're doing the right things basically in the background. Last 1 year has also been there. Going forward, strategy is to deepen the relationships with top 250 customers and increasing the wallet share, acquiring new clients, and exploring inorganic growth opportunities. So this is where I also feel that uh, because some of the segments might only grow by like 3 4 5%, like technology product solutions. So of course the revenue is like 15 to 20%,
काफी देर
but
थोड़ा देर में
so
से है
हम जा रहे हैं अपना दीपक
uh, uh,
चाय बना के
Amar, I think you can go on mute. Okay.
या
So
I'm on road
let
Pune I think it's elsewhere
okay. Let me check.
बनेगा ना चावल डालना लेट रहे हैं
Okay, I put people on mute. So I was on the second point. They are trying to acquire new clients with the bigger business revenue. At the same time, they are exploring the inorganic growth opportunities. Now, this company cannot grow organically at a very high rate. Competition is very high. So, though they are trying to increase the contract value with the top customers, but at the same time, they are looking for inorganic growth opportunities. In the past, also, they kept on doing acquisitions. I will go to that part also. But this is the way to grow for them as well in the future. So we have to keep looking for opportunities whenever the black box comes back and tell, okay, we are acquiring this or that company. We have to evaluate that opportunity and understand it better because this is going to happen in this company. Another one is enhancing the operational efficiency. So they're converging the centers and the services from the single center, and that's where their operating profit margins are increasing. So they're trying to control the cost there. And then targeting these hyperscalers and multi-tenant data center operators basically. So where they can get the more revenue from the same place. So this is their strategy for the next few years. And if it works well, definitely bottom line will see a better expansion than the revenue basically. If I go back to the sales and the growth path, what they have done in 6 years is similar thing, linear approach. Profits are also increasing by 10x and sales is also increasing by almost 10x. Going forward, what they're telling is revenue might grow by 2x, but the profit might grow by 5x. So this strategy is based on changing the linear approach to exponential growth in the bottom line. Basically. What they have done recently now, so if you understand the thesis, is promoter interested there? So they have raised the funds for expansion basically, and they see that massive changes coming for technology, both in data center and network infrastructure. And they have done 410 crores of funding, out of which promoter himself has put 200 CR. So I got interested. Okay, promoter is also putting it 200 crores of money. What price? Almost at 417 rupees. At 417 rupees as a warrant. What is the current price at which I got interested is around 470 rupees last week. 460, 470 rupees. So I thought, okay, the price at which promoter has put the money is very closer to what the stock is trading, and it has a good looking future if it executes well. At the same time, FIA is also contributing 200 crores. So it's similar to, so basically, this funding has been come from big people, 410 crores. And where they are trying to use this funding, expansion of data center capacities, advancement in network infrastructure, expanding into the markets, and doing the vertical integration, backward integration, those kind of things with the right solutions, and then providing the delivery in a better way. So this includes everything on cloud computing, cybersecurity, artificial intelligence, and IoT. This is the four segment on which they are trying to use this money. So this is again very close to the price on which promoter has entered, and if you go back and check the stock, possibly in last 2-3 days it has moved only. But this is where I got interested. As I said, inorganic growth opportunities. So if you go into the past, they have done it. They have acquired the companies over the years in different domains. So they are working to acquire IoT companies, cloud companies. They are working to acquire the companies in different geographies like Singapore, Middle East, and they are trying to invest into the data centers or social media space recently, basically. In 2024, we have discussed they have done this capital infusion as well as opened this data center of excellence and multi-million dollar business with the American online social media. So possibly it is Meta, and this is where they are getting the more momentum. Now, order book, they're telling in the next few quarters, deals are into place and the decision making is delayed because of the rate cuts, and that will flow back in a lumpy way in the next few quarters, and that is more into the AI and data center and cloud space. Over pipeline, which they are bidding, is almost $2 billion, which is highest till now. Backlog stands for them at $475 million as of last quarter. They have the deal wins in the data center and building solutions in the last phase, in the last quarter, and they're coming from different segments basically. Now, what is their target? Target is to hit $2 billion, basically grow 2x in 3 years in terms of revenue. Grow 2x in revenue in 3 years, roughly. So they started last year basically. So 2x in 4 years. So 1 year has been passed. And next 3 years, revenue is going to go 2x. Operating profit margin increasing or EBITDA margin increasing from 7% to 10%. 3% will flow to the bottom line. And I expect if they hit 15,000 crore rupees of revenue, possibly 12 to 15,000 crore of revenue, then possibly they might be looking at like 500 crore, 600 crore at the bottom line profits basically. So the profits might increase from this point 5x possible. That is what I'm expecting based on whatever the management is talking about. And in 3 years basically. And is the stock overvalued at this point of time? Let me go to the fundamental ratios again. So currently the stock P is around 43. So that is based on your this 138, 150 crore revenue profit line. So if it is going to increase by 5x, right, that is a very good number, like growing at 30-40% year on year. Considering that 43 PE is not very high, and that is also just so stock has improved by 10% in the last few days itself. So it was close to 40 when I started looking into this. So maybe in the very short term, if you look at this quarter result, September or December, it might be a little expensive. But if I have a horizon of 3 years, possibly I would be interested to get into this stock. It's not expensive for me that way. Okay, then I've captured some management commentary and snippet from the conf call where they are telling, okay, where they are expanding their solutions portfolio. I will share this document with you. You can go deeply and read every line. The point here is one of the cyber security which they are mentioning. It's a small part, but they are winning the deals there. and also winning from the airport segment on the cybersecurity, which is a bigger threat nowadays. And then adding more customers into the cybersecurity, this is what they are highlighting. They are trying to also outsource some of the products to manufacture. So basically, the similar products which they are selling on the black box, they would outsource, get it done, and put a white label on top of it. And as we see on the highlighted part, the focus to move forward over the next few years' time to more on the IP-led products. So they are moving towards the serving towards from serving in the past years to IP-led products. They are selling the products directly, which have higher margins in the data center. So this is where they are telling that their EBITDA margins will increase. Okay. And then they also think that data center business has a growth and they are trying to expand. Next part, which also I got interested in, they're expanding into the fab plants or semiconductor plants. These are high creative areas for us, and they're supporting the mission critical operations. But this is little bit further away. I would not be too much interested, okay, whether this will impact the revenue at this point of time or not. But this gives me a vision that yes, company is thinking and company is planning to do and trying to find opportunities in the coming years as well. That gives me that thought process that company mindset is not stagnant. They will keep on looking for the opportunities at the business landscape change. This is what this line highlights to me. So coming to technical charts, a very good cup and handle breakout happened around almost 300 rupees and stock went to almost 600, came back to 430, 450 rupees, which is the point I got interested near the big end of a flag. And last few days it has started moving, but still it is a consolidating under flag. So chart looks very, very promising there. Risk wise, as we discussed, there are some delays in the customer decision making process and it can, so I feel the current rate of revenue might go down in the coming 2 quarters and before it starts going up. So there could be a temporary dip there. We need to be careful on how much we need to allocate there if that is the case. And then they are doing strategic exit from the low value non-accretive customers. So that will also cause a temporary dip in the revenue. Whether it remains temporary or not, we need to see. Organic growth is low and acquisitions needs to be done. At what price, which businesses, we need to closely track and how they are deploying this capital. On top of that, they have a high value of intangible assets. That is a byproduct of acquisitions. So the moment you do some acquisitions, right, you have to pay more for the goodwill or intangible assets. And the company is into a domain where a lot of the solutions are like into softwares. So intangible assets are increasing and there is a potential risk of writing them off right in the coming years. So asset or balance sheet will go for a little bit tossed. And this is where I need to be careful. And then as the company is diversified across world, it has high number of subsidiaries, which is something I don't like in my investments. But yeah, I have to live with it. I would not say it's a risk, but personally I don't like it. So these are the risks basically. And that covers my whole thesis. I think maybe I have gone a little bit fast, but I will share the doc for you to study and go deeper and come back with more questions too. And now I think we can discuss if you have guys more questions, more thoughts, somebody has studied and can put some insights or thoughts onto it.
Hi Puneet, Sumit here.
Yeah.
It's a very good presentation, Puneet. Thank you for this. And one thing on the side, when I see when you mentioned about the valuations part, yeah, and on the valuation side, if we see Anantraj as its competitor on the data center side, you know, Anantraj is also on the real estate kind of, but mainly it is rising. It has risen in past 1.5 years, 2 years on the data center play, right? So Anantraj's PE is somewhere around 87, which is quite high compared to this. Okay.
Yep.
So in that sense, a peer-to-peer comparison, Blackbox is still like, at a lower valuation. However, Anantraj's market cap is 26 and this is somewhere around 8,400 approximately. Yeah.
Yep.
You also mentioned that, this particular company has a lot of businesses in IoT, cybersecurity, various other aspects as well. So is it like this is very diversified kind of company, or it is focusing on data center? Because data center, as I know, or as I have got to know, reading across, data center is growing 47 CAGR every year, and that will happen for the next 3-4 years. So how do we understand this? How much of its revenue is coming from data center? How much is coming from, cyber security and IoT businesses, kind of any breakup on that?
Yeah.
So this
Yeah.
is one. Yeah, I have another point to add, but yeah, you can say and then I'll add that point, which is very interesting. Yeah.
Sure. Sure. So definitely this company is more diversified because of acquisitions it has done in different fields. And only recently, I would say in the past 2-3 years, only it has started focusing on IoT cybersecurity. So the revenue which is coming from cybersecurity is very less, very minuscule, basically. In terms of 6,000 crore, it is nowhere. But they are saying this segment, they are doing the potential acquisitions and they are trying to grow that segment and winning the deals out of it. Data centers, they have identified this opportunity and they definitely say it is going to grow by 30-40%. And that's where the fund infusion has been taken place. They want to go into India's data center space, which they are missing basically. India's revenue is only 6% at this point of time, the whole 100%. And they feel this 6% can be increased by jumping into data center capacities and providing the solutions to it. Now, when they're doing data center solutions, where they differ from Anantraj is into more into real estate and providing the buildings and some kind of infra, physical infra. Here, they are mixing the physical infra with the digital infra. And you cannot ignore digital infra, how optimized it is, how you can stack the CPUs, how you prevent the cyber threats, how you can provide the structured cabling basically inside the system, and that's where their experience of global thing will come into picture, because when they are serving all the big players of the industries like Meta, Amazon, Intel, Microsoft, that knowledge will be transferring here into and combine physical and digital infra together. So I feel still Anantraj is not directly a peer, it is a small segment, a small focused approach of Anantraj in real estate side of a thing, but Blackbox is more capable of providing an end-to-end solution. So it's diversified, and I think it's a strength for this kind of a company when we are talking about the how the industries are shaping in the coming future. I would not say it's a risk or disadvantage for this company. Uh, all the dots will connect together and perform seamlessly. That's where the strength of management is, whether they can achieve it or not. That's where the bet is coming into picture.
Mhm. Okay.
Right?
Adding couple of points, thank you for that. Adding couple of points as well. Because data center businesses require a lot of space, When I say a lot of space, that means real estate. Okay.
Hmm.
And that comes at a cost. Okay. In that terms, Anantraj is well placed because it is already in the business. It has land bank. It is strategically placed in the NCR and few other key central regions. So that there is an advantage to Anantraj compared to real estate, because these guys are not in real estate. They might be leasing or buying or anything to establish their data centers.
So I will interrupt you
Yeah.
here. So they're not buying the land space here. So they are
Mhm.
banking upon the client to have that space. For example, Anantraj had that building, and Blackbox comes as a solution provider for that building.
Okay. It's the solution, because the data center is also a lot of energy intensive
Yeah.
business. Okay. Apart
I
from
guess
that,
this can I interrupt?
yeah.
This is Amar.
Yes.
So what I understand, the way I can do this as a simple analogy. Suppose Meta or Microsoft, which is like a big money, right? They come to India, they want to create a data center because they want local to the India serving them. So like Sumit said, they will look for a entity which can provide that land bank, that is where Anand Raj and those kind of players come into play. But then once you have the land bank and you have a physical building in place, like where you can construct a data center building and all, like Putin mentioned, then that is where the digital infra will come into play in terms of like what are the different switches, what are the infra rack spaces and all those, what is that cooling solution. So if I look from that perspective, the end client becomes the paisa where it is going from, that is Meta or Microsoft or some big pocket guy. Anantraj will become an enabler. There is an ecosystem where Anantraj, instead of becoming a competitor to Blackbox, they both will be a part of the ecosystem where they both need each other. And business will kind of flow from that. That is what I understand from this whole discussion.
Correct,
Yeah.
correct. I completely agree to that. Yeah, it's very valid point mentioned and nicely explained. One very last point I would like to make when I'm seeing, Anantraj, standalone Blackbox, what I'm seeing is that the annual revenue of Blackbox is somewhere around 6,000 something. Yeah, 6,700, 6,200 approximately. And if
Yeah.
you see the market cap, it is somewhere around 8,000 crores, right?
Correct.
So it is that every year since last 3 years or last, this is trailing 12 months, almost 2.5, 3 years, Blackbox is adding the current market cap to its revenue. Yeah.
Hmm.
So in that sense, this business is really good. It is growing well. Every year that market cap, 67, 70% of the market cap is in the revenues. So that is
Yep.
one real good thing that I liked about it. Maybe like a lot of people are not have an eye, but this has already run up, so people might be having an eye. But only thing is dipping the cost in last 3 years. If I see CAGR is sales growth is 10%, and the profit growth is 5%. So that is one thing, because the ecosystem of data center is growing, and why in the last 3 years or even in the last trailing 12 months, the revenue has dipped. So that is one point maybe we'll have to dig deeper. Otherwise,
Yeah, so that's where they have identified they are doing too much and without output coming back. So that's where they change their model now, and they want to focus on the profitability and improving the EBITDA margins to flow to the bottom line. And that's where sales might become stagnant for a year or two, because they will remove the customers which are not ready to pay up more, or they are not able to upsell more to those customers. They are trying to remove those people and trying to get bigger people into the picture where they can have the this capability to ask more, basically. And as you pointed out, market cap to sales, I would say it's an undervalued at this point of time still.
yes.
Looking at if the strategy works, definitely it's an undervalue from that point of view. But
Yeah.
will it work? Will it work? That's where the market is struggling to give it the right value, maybe at this point of time. So market is still anticipating on the sidelines. Will it work? Will it not? But if I see the recent technical chart, right, some of the people have jumped in, right. Now, it has been almost from 2021 to 24, 3 years. The stock was not going up. Only recently it started moving up, and it has went from like 250 to 500, 600 rupees. And almost that jump is because of the market is able to see that their EBITDA is increasing and profitability is coming back. And then promoter infuse more money on top of it. So I think market is trying to structure it out where it will fit in. And I don't see a lot of talk is happening for this company in the social media at this point of time. But looks like the time might be coming. Maybe some more consolidation might happen. But technical charts are definitely telling me something that things are happening here.
No, in a way, it is good that it is not being discussed a lot in the social media and the other media. So it's good for us, to look at it and maybe invest.
Yeah.
Thank you, Puneet.
And one of the other risks you can see clearly in this chart is it can easily lose 50% from top. So even in the past, I have seen it has lost 50%, 60%. And this is the bigger risk, of course, in the small cap and mid caps when the things are not in their favor. So that is the bigger risk if somebody is not capable. And that's why this group is where I can share this kind of stocks and not everywhere where people are not mature. This group is more matured and can take a risk call. Yeah. Any other thoughts by someone else?
Puneet, Amit
Yeah.
here. One small
Yeah,
thing I
Amit.
just wanted to highlight. Just went through the PPT while you were presenting. FIS has continuously reducing the stake in this, right? It's a small
FIS.
thing, not
Okay.
a major red flag, but just that
Hmm.
every year FIS has been offloading some kind of stake. So need to like that raised fund that's actually good what they are doing. As
Yeah.
you rightly said, we need to observe this for like 2-3 quarters and let the management walk the talk. That would be
Yeah.
the formula, right?
Yes.
As you rightly said.
Yes. Yeah.
Only this FS क्योंकि DIS तो कुछ है नहीं उसमें 0.01 or something. I just
Yeah.
so
So, but if you see, FIs and DIs have infused 200 crores now, and
huh.
their partner, so they will come up in the screener basically in some time.
Yeah, in some time. So this
Yeah.
two quarters, I guess, as you rightly said, 2 quarters need to observe the what are new things they are doing.
Yeah.
Yeah.
And part of the noise on the FIs coming down is, I think, globally उनका direction ही ऐसा है कि they find India as a whole to be an expensive level. So they are looking for
Hmm.
cheaper markets globally. So that can be one reason instead of like having something negative on the black box side. It can be part of the bigger picture, I think, where if FIs are constantly withdrawing money, right? That has been happening.
But despite that, Amar, I think 200 crores they have put right now around 420
That
rupees.
is a positive, yeah.
Yeah,
True.
that is positive. So 200 crores is a good number here.
Yeah. So Puneet, one question on this one, like you said, and most of these companies in technology, like they work that way, right? Inorganic growth also is part of their expansion plan and also part of their growth. But how does this cash flow or like balance sheet look for Blackbox? Since I'm looking at it for the first time, do they have that wherewithal or it will be fueled by debt, you think? Because there is already some debt on books.
Yeah. So that's what they have done recently. First, they have tried to put 400 crores and try to see acquisitions coming from that space. Second
Mhm.
thing is, most of the time in the balance sheet, intangible assets or the goodwill numbers are growing up. That's where I'm a little bit more worried about. Instead of from where the money is coming from, I would be more worried about if they will be doing write-offs in the coming time based on that, because you cannot justify high intangible assets or goodwill in the balance sheet, because that will be counted as assets, but output of those assets is almost zero, right? So
Correct.
return on assets almost zero. So they will write it off to reduce the liability somewhere basically, and that's where I feel a little bit scared. And from where the money is coming, I think their profitability and cash flow conversions possibly will give that money, because their free cash flow is good over the 5 years or 3 year period, despite having all these ups and downs. So I'm not worried about that part, whether they will be able to fund it internally or not. Possibly they will.
Right, right. I just saw the intangible asset. It is as high as 85 crores in the last quarter. That's a big number.
Yep.
Yeah.
So I would share, couple of experience from the past stocks that which I still hold. One of
Hmm.
the stock that I still hold, Apple. Apple,
Hmm.
like 2-3 years back, I'm holding it since like 5-6 years. I have been through the growth story of it. So on that, Apple acquired a lot of businesses, like mine business in North America, somewhere there, and they had good guidance on it. And when people buy on this inorganic growth kind of thing, they acquire the companies. It takes time for them to, for the acquired company to get up to the speed of the parent company, to come up to that level and speed. So that those things take some time, and the focus of the management also goes there, the energy and the focus. So, and as this black box is said to be acquiring a lot of other companies, other geographies, maybe that might be also a concern. I'll not say concern, but again, thing to look at as how it aligns the other acquired businesses to their own core business, or come up to their speed. So this is one thing that has to be looked at. And similarly, like Apple didn't grow much in last 2.5, 3 years, but of late it has started growing. And that was the time horizon given by the management, if I remember 21, 22, that it will take, we'll see 2 years down the line what happens, and we would like it to give that much time. So yes, this is one experience I would mention it here as well. When Puneet is saying that it is acquiring a lot of businesses in cyber security, all these are very growing businesses. Cyber security, it is coming to be big time in India and globally as well. Everything going digitally, digital data based, web based. So cyber security is the next big thing that will be there in the market. But yes, it has to be looked as how the management aligns the acquired businesses to their own. Yeah.
Hello, Sumit.
Yeah.
Yeah, regarding the comparison with Anantaraj, what I feel, because this company, earlier known as AGC Networks, so it came to I was tracking this company when it was around 220 or 30 like that. But somehow I did not deep dive into it, and I missed it that time, and later on it has moved up. So one part of this growth story, I mean, whatever there is baked in the future or the vision of the management, so that part has been captured in the price from 230 to 42 the current price. That is one thing. Next thing, regarding comparison with Anantaraj, I don't think it should be compared with Anantaraj. If you compare it with Anantaraj, then you can compare it with there is one Hiranandani group company, that is Iota, I think.
Yeah,
So
Iota.
Iota, okay. So it can be compared with that company because
Did I lose the voice or it's
what
for
they are
everyone?
doing. And this company, this black box, it is in
So I think we are missing you, sir, in between.
so they are meeting these kind of requirements of the data center. So be it Hiranandani or Anantraj, they will need the services of the a company like Blackbox. So it is, I do see this as a story to grow with the riding data center boom in India or anywhere. So that is my view. Uh, Currently, of course, what I feel, this company need to show its sales growth. So that is not happening since many quarters. It is almost stagnant. But on other parts, this company is improving. So I think, yes, it looks good. But I don't think this is the right time to put just good money here. So one can, if I have to buy, I have to go very cautiously in this company. So
Yeah.
that is my view. Okay.
Yeah, it's a right view, sir, because I am also saying that it may be we are sharing this company or talking about this company maybe 2 quarters earlier, and possibly the market may recognize maybe 2 or 3 quarters later. And we have that much time to evaluate this company. I think that's where we can get that advantage at the early start. Thank you for your views.
Puneet, I have two questions. Just thought I should ask. See, one is in the whole value of data center chain, value chain analysis, most of the money which goes into power and cooling. So this is into the IoT and the other, the virtual infra buildup. So how much of money do you think overall from the value chain perspective will flow into this aspect per se? Because out of that, a black box will be having some amount of share. That is one thing. Second thing is, if you actually look at their finances also, in fact, March 23 to 24, though their sales are stagnant, their profit has jumped almost 4 times, like I think 4.3 to be very precise. Is there something that they have done where, all the other parameters look the same, but the profit has jumped? So where is this coming in from? Any idea?
So I would answer the second one first. They are trying to reduce their cost basically. So they are trying to converge services from different centers into the one center itself, from which all the global things will be served. So they're trying to reduce the kind of a contact center cost, customer support cost. One of them is coming from that segment. Second is what they're trying to increase the contract cost. So some customers have agreed to it, some did not. So who are not agreeing, they're telling next year contract will not be happening with you. Those who are agreeing, their contract gets into the picture right away. So there possibly some segment of revenue is going away from the low end customers, and some revenue is coming back from the high end customers. So that is currently nullified because we are losing the customers on one side. But the moment we stop losing the customers and that strategy is done, you will see the segment which is providing the revenue from the high end that will start impacting the sales also on the top line. Currently it is stagnant because we are getting some and losing some. Now from wherever we are losing the low end of customers and we are getting the high end customers there. So that will changing the bottom line for you. So from that the growth is coming from the pet side, combining of two, three things. Now coming to the first question, where does it fit in the whole segment of data center? I would say there are competition in different segments of cybersecurity, IoT, digital infra, LAN, WAN, networking. Everywhere there is a competition, but it's a necessity for a data center. You cannot ignore it. And I feel Blackbox is in a position where they have established it with the bigger players. And if India is trying to put data center has to be in India, then definitely a lot of players need this kind of services. Will any one player can serve all? No. And that's where now once you set up this power and oil cooling everything, right, that is coming from transformers and the power supply which is coming to data center. This segment is a different niche segment where the transformer players or the power players cannot play. Even the real estate players will provide the physical infra. So these players definitely has a need and they will survive well. Only when the big money start moving from that segment to this segment, it's a rotation of a sector. Possibly that's the point where you will seeing the impact on this kind of a company. But this company still survives in a very good way in that space. It's not, we can say that it's a very, very minor thing. No. Without it, no data center exists, basically.
Puneet, one more thing regarding this. This is my just a small input to what Sital has put the query. If we look at the 3-4 figures, that is the return on equity, then working capital cycle days, then cash conversion cycle. So from that, we or debtor days also. So that clearly indicates, if you look at working capital days, so it has been many times negative also. And it has improved a lot on that part. Capital implied percentages, they are also improving it. So that clearly indicates the company is trying to utilize the resources, whatever equity is there or asset is there, that is in a better way, which earlier it was not doing that way. So that is the reason that even if sales is not increasing, but the company is moving on the higher value chain. I mean higher value chain, not on product I am telling, that is on the operational performance side. So they are trying to utilize their assets better way in comparison to the earlier. So some, we can say some a structural change in their business, that we can say. So that seems to be what I could understand from the figures. So that is my view. Why the PAT is increasing higher than the sales. And any company, if it is able to increase the PAT higher than the sales, it will not continue for all the time. But yes, when that transformation is taking place, some structural change is taking place, that is good, and that seems happening here. So that is positive sign.
Thank
Yeah,
you.
to add to that, as well, uh, as we see that sales has not grown, past 3 years much. But they are trying to get efficient, physically fit. The entire business is getting physically fit, given all the numbers that Avdesh sir mentioned. Yeah. Now that Puneet says that, also the like prospects of they removing or they doing away with the lower margin clients, they are doing away with that and they're trying to focus on the higher value clients and higher margin clients and getting into that area. So it means that they are also focusing on growing the business as well, or the sales side. And as the industry grows, which is there is no doubt about it. So definitely this will grow. But yes, again, like 1 or 2 quarters, because they have made their businesses very efficient, given the numbers, all that is in front of us. Now, once the sales starts growing, I guess this will, ramp up like anything.
See,
Very true. It's
even
quite evident in their cash conversion cycle as well, actually, because company like this having a negative cash conversion cycle, it's quite a positive thing. True.
that
Yes, yes.
indicates they might be getting advance also.
Yeah, possible.
Puneet, is it so? They get
So
advance
that
on the orders.
yeah, they do get the advance, but should it really
I
translate
feel
to
negative.
negative part? Yeah. So, but it really translate to negative ones. I was also a little bit surprised. I need to dig deep there, but they do get this advances basically.
I
That I know.
Puneet, while studying many companies, I have observed at least I am having some uh, 5, 6 companies or 10 companies like that, where I invested in earlier days. And when I observed the cash conversion cycle was decreasing, or in some cases it was negative or negative also. So usually negative means they take some advance. So instead
Yeah,
of putting their own capital, they are getting the capital. Okay. So they are earning on that. So negative working capital cycle means they might be getting advance. And also, if you look at the return on equity, some 5 years, 10 years back, it was not to be, it was negligible kind of thing. But since last 3 years, it is increasing. So that means this company is whatever equity they are having. So they are utilizing that very efficiently. So two things: the cash conversion cycle negative, the improvement. There is lot of improvement on the ROC, ROE. So that indicates a better capital allocator, I can say.
yeah, yeah. I think Sheetal, you got your answers.
Yes, thank
Yes.
you.
Okay. Yeah. Yes, sir. Go ahead.
This is Amar Puneet. Just wanted to add one more point. When Sheetal mentioned they are into IoT, I think we should be negligible because IoT in India it is set to catch up. They don't really provide that much revenue where it will contribute to the in a big way. Blackbox, where their USP is going to come into it, they are into nut and bolts of the data center from a hardware perspective, right? So that is where they will come in. They have recently established a hyperscale data center in Minnesota, US. So hyperscale, that is the part which is kind of the in thing, and that is where most of the companies who are into data center who wants to establish a data center, that is the expertise they look at. And part of that will also be the cloud play and the AI play. So cloud, AI, all those mix, the high end stuff. That is where Blackbox is currently. Once I say that high end is more into the hyperscale, we are talking about cloud, we are talking about AI. And on the hardware side, they will be providing all the hardware. So this combination is what I think is going to be a killer one, where it becomes a kind of a circuitous end-to-end solution. So that is the ecosystem of the data center where Blackbox is slotted in. And that will definitely benefit more from this whole data center movement.
So could we say like that, because they are into hyperscale data centers are into the critical edge computing, right?
Yeah.
So I think that's going to catch up in a big way in India, and that is where Blackbox sees its bread coming in. Would we be right in saying that?
Yeah, you could be right in saying that. And the another aspect to it is when we say that if data center are going to booming in India, the end clients are still going to be Meta, Oracle, and Microsoft and all the biggies from US. Why? Because they want to have a presence in India, because that is where how do I put it? The cheap labor comes in.
Your voice is not audible. We're losing you there.
So they cannot afford not to be in India because India is growing. What is fueling? Second point is, compared to India, there was Ireland, right? Ireland was the one where everybody wanted to be there. All the tech biggies, they wanted to be there. But Ireland is facing a shortage of power, and data center are power hungry. They cannot do without power. And Ireland has kind of raised their hand saying, we are going to put a stop to it. We are not going to entertain more clients. They literally have said that because our hands are tied. If kind of power to the data center companies for local people consumption, the power is not going to be. So that kind of shifting base to India, helps shifting base to India.
Yes, so that's where we have
India
an
will also
advantage
face that
because
problem, because when you talk about data center and computing, because for that you need more power through different kind of renewable power or nuclear power needs to come into play. Second thing is it consumes lots and lots of your water table base. That also will become a problem. But for now, it is an opportunity. Down the line, we will face the same problem. So that is all I'm trying to say.
also just please educate me. The new data policy which they bought out, right? That 75% of the data, if they're doing something in India, has to remain in India. You think that is going to give a critical advantage to Blackbox as well?
Yeah. All the persons who are like Indian players into the data center thing, they will benefit hugely by that. It's a regulation thing, right? You have to comply. And the
Right.
data localization is always a big issue. And that is where all these biggies are coming to India and setting up data centers left and right.
So could we say that because of this Blackbox can expect, probably, doubling the revenue kind of a thing?
I will not go into the numbers because I'm just now started looking at it, but the opportunity is huge. That's a given. And like I said, these are the various factors which are coming into play.
Thank you.
Okay, guys, we are almost at 1.15 hours, so I have another meeting to catch up in 5 minutes. So I will stop it here. I will share the document and then we discuss more on the chat there if you are okay.
Sounds good, Puneet. Like we will also have a look at it. Any questions will come back.
Thanks, Puneet. Thank you, each one of you. It was a good learning. Yeah, we can probably look at deep diving a little more on this. Thank you so much.
Hey, thanks, Puneet.
Yeah.
Thanks, Puneet.
Thanks, everyone.